It was an unexpected beat in terms of the first quarter profit, despite the estimates for a decline. What was the driver?
Figures. The full report comes on Wednesday, so we don't have the exact details of what led to this beat yet, but it's a pretty safe assumption that it comes all down to FIC. Considering what Deutsche Bank's Wall Street peers did, we had a surge in volatility. That in itself leads to a surge in violent market swings. So that helps their trading results. So now we have this positive revenue surprise. Their CET1 solvency ratio, that's pretty much in line. All of that is pretty supportive of Deutsche Bank's long-term strategic plan to turn things around after they saw 5 straight years of losses. And it is notable that they decided to give these figures out early. They're understandably worried about a volatile week leading up to their earnings date on Wednesday. So here is a way for them to quell uncertainty, and it might give some investors at least temporary relief after they've had to nurse losses without dividend payments.
It wasn't all good news, though, Dani. Deutsche Bank talked about the fact that they may modestly and temporarily dip below their CET1 ratio. Do we know why that is? It's
kind of the bittersweetness of a better trading result because of coronavirus-induced market swings. That might help them in the short term, but in the long term, that economic impact is hurting them exactly where you're mentioning, Nara, that leverage ratio and its CET1 ratio for the full year that they said they're likely to miss. The bank has pointed to the current environment, saying there's going to be a higher level of defaults. And at the same time, it has been trying to provide embattled businesses with financing, and that in itself could increase risk-weighted assets going forward. And already Deutsche Bank has one of the largest piles of hard-to-value holdings among its peers. The one saving grace here might be European regulators. They've been trying to give relief to financial firms. Deutsche Bank says that will give them headroom. And let's keep in mind here, Deutsche Bank's liquidity is much stronger than it was at the start of the global financial crisis. So that might also help them mitigate some balance sheet risk.